Hello and welcome to the For Pete's Sake podcast. I'm David O'Connor with eXp Realty.
And I'm Alex Blencarn with eXp Realty.
And today we are going to be reviewing the Peterborough City October 2023 market stats. And as usual, we got their deal of the month, tip of the month, but we also got big news in the economy that we want to, well, maybe we'll kick off with that.
Yeah, I mean, let's start with the bad news, get that out of the way, and then maybe some good news for some buyers coming up. But the bad news, Canada might officially be in a recession. We did get some preliminary data from Stats Canada coming out with their idea for GDP in the third quarter. The official data comes out November 30th or 31st, whatever the last day of November is. But we will get the official data then. But they did release a preliminary report saying that we did contract, I think, by negative 0.1. Our GDP contracted for Q3, which gives us back-to-back quarters of negative growth in GDP in 2023. So that is the official definition of a recession. We haven't quite seen the job numbers get hit or employment get hit like we normally would in a typical recession. You know, maybe it's a little bit lagging. Maybe we'll start to see that in Q4. But yeah, I mean, data's out. It's official. It's not a huge recession so far. I mean, we're negative 0.1 and I think negative 0.2 for our quarters. So, you know, not huge numbers there, but it is officially a recession.
Well, it's the worst kept secret. I think most people believe we've been in recession for 6 months now. So.
Yeah, so there is real GDP and per capita GDP. Per capita GDP is when they adjust for population growth. And when you adjust for the crazy population growth that we've seen in Canada in 2023 and 2022, we were actually in a recession previously. I mean, it's tough to say what is a recession. You know, it doesn't really come out until we start to feel it as consumers. We definitely felt it in terms of, you know, gas and grocery prices, but, you know, have we seen the job layoffs yet? I don't think we have yet. So, I mean, let's see what happens there. But yeah, we were in a per capita recession when you adjust for the population growth, you know, earlier this year. And I believe that's when it started for per capita.
Wow. Not surprised.
Yeah. But I mean, enough bad talk. Let's get into some good talk. How was October, brother? How did you have? How was Thanksgiving? How was Halloween with the kids?
It was good. We my daughter's 2 now, so she was out trick or treating. They liked it. It was snowing, so we were out there for a little bit, and then we came back, gave out some candy. You know, they did well. They had a good time. He was Super Mario, which seemed to be the most popular costume. We saw about 30 of those. And my daughter was a unicorn. Super cute.
Nice. How many kids? Do you get a lot of kids to the door?
Oh yeah, easily over 200.
Nice. That's good to hear.
That's a lot. Yeah, it's a good family, young family neighborhood. What about you? Your big update since our last one. You're a married man now.
Yeah. Married man now. Been loving it. Had an awesome honeymoon in Mexico. Caught a good sunburn there. A couple new freckles. So. Yeah, can't complain. It's been fantastic.
Honeymoon and fun's over. Back to work, right?
Yeah, back to work. I caught a little bit of a cold, so I do apologize if I get a couple sniffles or a couple coughs throughout the podcast here. But yeah, other than that, doing fantastic.
Awesome. As I said, it's back to work for you, so let's get into it.
Yep. So huge declines. Let's talk about that average price decline year over year, just about 7% year over year. But the scariest thing is we saw about a 12% drop month over month. It declined by about $60,000, the average price for a freehold residential home in the city of Peterborough. New listings are down, about 15.5%. Sales got rocked. We're down 38% year over year. Days to sell are pretty much the same at 3%. But yeah, look at that sales number. Just got rocked year over year.
that's one of the biggest numbers we've seen on when we were in this podcast. But yeah, the real story to me is the month over month, which we get into in these slides here.
Look at that graph. Like, you just see it fall off a cliff, that last data point there. Like, it's, yeah, I mean, a decline of about 60,000.
Yeah, here's where it shows. If you look in the bottom right there, you can see last month was 653,000 down to 572 in 1 month. That's a little over 12%, you said? That's huge.
And you look at, when it was around that 570 mark, it was last December when things were quiet. I mean, typically December and January, would you say or agree that they're pretty much the slowest months for real estate? So, I mean, we're back down to those levels there. It does, fluctuate a lot. You can see it go from 575 back up to 688 in April. And that's, December 2022 to April 23. So, are we going to see that jump again? Are we going to see this time, next year, we're going to be looking at the data and see that we went up another, almost $100,000 in 6 months? I don't know. I'm a little bit nervous for the average sale price, especially with the recession coming out. I think market sentiment is just going to be down, for the next couple of months until we start to see some declines in the fixed and variable rate mortgage, and maybe some demand comes back to the market. But I don't know. I'm expecting some declines or a flat line here for the next, 3 to 4 months. Impossible to say for sure, but based on what's sort of happening in the country and what's happening in the news, I think things are going to be pretty slow here.
Yeah, it's hard to believe. Just about a year and a half ago, it was up to just over 800. It was 801, I believe, in February of 2022.
Yep.
Obviously, that was inflated, and there was a lot going on there. But to see the other end of it here, and the way things are going, and stuff tends to not move in December. January could be definitely the low, and we'll get into it. But silver lining is, hello buyers. It's a good sign.
Yeah, hello buyers. I just think about that for a sec, though. That we were at 805 in February of 22, and we've dropped $230,000. That is absolutely nuts. $230,000 by October of the next year. That's about a year and a half. We've dropped $230,000. That's crazy.
Yeah, if you remember, it dropped into the 5s and went back up to 7 earlier this year.
Yep.
And then, All right, let's see what we got here. Oh, the new listings.
Yeah, again, fell off a cliff month over month. It's a little bit of a decline year over year. You can see 185 in last October, and then it was 104 in 21 for October 21. So we're not as bad as we were in October 21. People still seem to be listing their homes, but certainly not as much as they were last month. We saw about a 50 listing decline in the number of people that came to market and tried to sell their home in October compared to September.
Obviously there's lots going on, but I'm sure some of those September or sellers that were hoping to get, spring prices, they realize they're not getting it. There's been a lot of canceled listings. Maybe they'll come back in the spring when they think the market bounces back. But October tends to be the 3rd or 4th busiest month.
Yeah, that's what I was just going to say. It's weird to see, we're in sort of the thick of the fall market with September, October there, and it just didn't happen this fall, and especially in October. What's going to be interesting is to watch these numbers for the new listings in terms of seller sentiment, because, we were talking a little bit about this off air, but what happens with market values? How do you price your home when you're looking at comps from September, August, when it's a totally different market in October, November? You can't really see the house down the street maybe sold for 570 or 580 in August or September, but is it still worth 570, 580 in October or coming into November? The data would suggest otherwise. So it's going to be interesting to see what happens in terms of new listings and in terms of that average price.
To me, this is the biggest one here.
Yeah, look at that one. Yeah, that's awful. We dropped about 30 sales, month over month, which is, we were at 93 in September and 62 in October. So that's about a, 27% decline roughly. That's a pretty huge decline month over month, and a giant decline year over year, where we were at 101 last October and we're at 62 in October 2023. And you can look at
we all know 2020 and 2021s were crazy roller coasters. There's a lot of global impacts, but you compare that 62 to 2019 October, 140 pre-pandemic, more of a typical fall market, and it's down below like 60-65%.
Yeah, took the words right out of my mouth. I mean, I was just going to compare it to those sales numbers, and it's still a major decline. When you look at 2019, 2020, 21, 22, we're all, I'd say hovering average, let's say, 130, maybe 125 over the last, those 4 years. And we dropped down to 62 in 2023. So that's a record year. The last time we had sales that low, it was in December of 2022, December of 2019, and the lowest amount of sales was in January of 2019, where we had 54 sales for the month. Now, the difference between this market and the market in those months that I just mentioned were that nobody was really listing their home in those months. Whereas this month in October, we saw 62 sales, but I think it was around 156 new listings. So people are still trying to sell their house, but nobody's buying it, which will bring us into the next couple slides here, where we see the sales to new listings ratio. So again, this is a ratio where we look at the number of new listings and compare it to the number of sales. This is a good way to track the type of market that we're in. Previously, we've mentioned the months of inventory. Unfortunately, we can't get a consistent data point from the Treb stats for months of inventory. So we have to rely on the new listings to sales ratio. So how it works is if your listings to sales ratio for the month is below 40%, you are in a buyer's market. So what does that mean? That basically means, for simple math, 100 new listings and 39 sales for the month. So that would mean that out of those 100 listings, 39% of them sold, which officially marks a buyer's market. Now, we didn't see those exact numbers, but we did see a 39% sales to new listings ratio in October, which officially, statistically, puts us in a buyer's market for October. So that is huge news. This is the first buyer's market that we've seen statistically here in the last 5 years. I'm sure, we could go back further, but the stats only allow us to go back to 2019. And when we compare the sales to new listings ratio in every single month since the beginning of 2019, we haven't seen a buyer's market. So this is the first buyer's market in at least 5 years, which is absolutely crazy for the city of Peterborough.
It could be close. I think it might be even north of 10 years. That's scary numbers. Just there's not a lot of people out there. But it just means there's lots of opportunity for buyers. Like if only 40% are selling, you got to remember those listings aren't selling, are spilling over to the next month, and then there's more listings than sales. So we're just sitting on a lot of inventory for the amount of active buyers we currently have.
Yeah, and I think the inventory is just going to continue to stack. And you think about the supply and demand curve. In theory, we should see prices start to drop if this inventory continues to stack and we don't see any sales.
I think what we're going to see, though, is as we get close to Christmas, obviously the sellers that have to sell are still going to stay in the market, reposition themselves. But the ones that are kind of testing the waters, or were only going because they thought they were going to get this certain price point, we're not in that market anymore, you might see them just pull long term or pull and come back and hope for something better in the spring. Yeah,
absolutely. I think that's going to happen. And I mean, talking to sellers, I'm definitely seeing that anecdotally, where, let's try it till December. And, if we don't sell it, we'll just relist it in the spring and see how it goes. And let's see what happens with the number of new listings and see how many sellers are thinking that way. historically we have seen pickups in terms of buyer demand in the spring, and hopefully we start to see that as well, and maybe we start to see those interest rates start to decline, both the bond yield and the Bank of Canada. The banks are predicting that we will potentially see declines in mid-24. So, maybe that could bring some relief to the market. Maybe that could bring some more buyer demand to the market, because again, yes, there are fantastic deals out there, but one of the hardest parts right now is to qualify for a mortgage. If you can qualify for a mortgage right now, go out, shop around and look for that perfect home for you, and maybe you and your family, and go try and find that perfect home, because there are deals to be had. You can get it under list, which you couldn't, in the last couple of months, because we are officially in that buyer's market. You can throw conditions, on terms, on closing dates, everything that works best for you as the buyer, because we're in that buyer's market.
Yeah, we got lots of tips coming up.
Yeah, so there's just, the actual data. We're 62 sales, 156 new listings for the month.
But again, that's on active listings. So spillover from the month before. So it's probably a little bit more staggering, the ratio.
Yeah. And unfortunately, we were pulling active listings before. Unfortunately, Trev doesn't offer that data point. But we can, measure what type of market we're in from that sales to new listings ratio. So days to sell, you can see it's gone up month over month, not major. So I don't know. What are your thoughts on that? Like we dropped 1 day year over year, 26 days on market in October 22 and 25 in October 23. And we only climbed up 4 days since September. So 21 days to sell in September, 25 in October. What do you make of that?
I think there's two things happening. First of all, it didn't go up as much because sellers and seller agents are starting to price a little bit more appropriately. So that's a big driving factor of days on market. Like overpriced listings, they're going to sit. So it usually takes months to catch up, but I feel like things are starting to get priced a little appropriately, which is why. But then you still see the number go up because only 39% of properties are selling. There's some good product that isn't moving. Right?
Absolutely.
Is it some of it's price, but I feel like the prices are starting to come down. Things are starting to get priced a little bit more appropriately. Obviously, these numbers coming out is going to influence the market and how people are going to price in the coming weeks. But yeah, I just think buyers are just waiting, or as you said, the approval processes and just trying to get the financing in place has been difficult. So yeah, if you're a cash buyer right now, I think rates will go down, or prices will go down a couple more months, and then maybe February, March could be like an amazing time to buy. And then if the Bank of Canada does a rate decrease, there could be a nice sweet spot for buyers in the first half of 2024. But a lot can change between now and then.
Yeah, you heard it here, folks, on the For Pete's Sake podcast. David O'Connor just called the bottom of the Peterborough real estate market. And potentially we'll see a bottom in February, March. And let's see what happens. I got to agree with you. I think once we look at this, the next graph coming up, we can see the price distribution. And one of the factors I think that might play into this days on market is the type of product that is moving. The type of product that is moving is, homes that are priced under $650. So we saw, as you can see from the graph here, look at that change month over month. For reference, a quick stat, don't quote me on this because I'm going off of memory, but when I pulled these numbers, I think it was about 42 homes sold over $650 in September. So 42 homes sold over $650 in September. If you had a home that was priced over $650, you can see from the graph there about 42 sales for that month. Compare that to October. October, 16 homes sold over $650,000. 16. The majority of homes sold, as you can see from the graph, were under 500,000 or under 600,000 if you calculate it. The majority of homes sold under 600,000. So that entry level product, around under 600,000, sub 500, those are the homes that seem to be moving. We don't see a lot of movement in those higher priced homes, those typical move up buyer homes. So, you're going to sell your maybe wartime bungalow in the south end and move up to something maybe in the north end, maybe in the west end for over 650. We don't see those types of homes selling in October.
We talked about this the last 2 or 3 podcasts where I was saying that because of the small sample size of sales, we're having like 60 to 70 sales, that if there were just a handful above 800 was skewing our numbers. So when we were sitting at around 650, I said, it feels like our market should be lower. Like it felt like a buyer's market, but because this distribution shows you, and for people who don't know, the table on the left was last month, the table on the right is this month. Last month, there was a lot more sales at these higher price points. But when we only have 60 sales, 4 or 5 like $1 million sales can really move the needle on our small sample size. So I thought it was overinflated for the last few months. I kept saying that just because of this distribution when I noticed there was an increase of sales at the higher price points. But now we've seen it go the other way. We have about the similar amount of sales, but it's at the lower sales price. So the average sales price is obviously going to come down. So I do feel like it came down, but I think it was misrepresented the last couple of months. So I don't feel like it feels drastic to go down 12% month over month, but I feel like that wasn't really the reality. The distribution is also a factor.
Yeah, and that's a huge point. So again, market, when we're looking at the average sale price, this is why you can't just look at the average sale price when you're trying to gauge a market's health, because the average sale price is really based on buyers' preferences for that month. If more buyers are choosing homes over 800,000, if more buyers are choosing to buy homes over 700,000 in 1 month, again, because it's sort of a smaller sample size in the city of Peterborough, that's going to pull up that average sale price. Whereas this month we saw buyers preferred homes under $650,000. Generally under 600, as you can see from the graph here. That's going to pull that average sale price down. So, I mean, let's see what happens. Let's see how buyers' preferences change, not only in this rising rate environment or maybe steady rate environment where now you have to qualify at 8%. You have to get stress tested at 8% because bond yields are around that 4% range. Let's see what happens and how the buyers' preferences continue to change, especially as news of the buyer's market starts to emerge into the buyer's newsfeed. That generally will change sentiment. It will change what buyers are thinking about the market. And, as real estate agents, we can help educate both buyers and sellers because we're really on the forefront of this market. We analyze these stats and, before the news gets wind of it, maybe 2 months later, we're there letting and advising our buyers and sellers what's actually happening in the market as soon as it happens.
I've been advising that we've been in a buyer's market for 3 months.
Yeah.
The numbers weren't quite showing it yet. But.
Yeah. So you can see there, we can go back and sort of look at the difference between under 500K, sorry. So 17% of the homes sold in September were under 500,000, whereas 29% were under 500,000 in October. Again, another one between 550 and 600,000. 13% of the homes sold in September were between 550 and 6, but 22% of the homes that sold in October were between 550 and 6. So you can really see the buyers' preferences really lean towards that, sub $600,000 home. And we can go to the top end. Homes that sold above 700,000. 29% of the homes that sold in September were above 700,000. 15%.
So almost a third of the
in
homes
October
last month were over 600. And I know for a fact there was a few $1 million homes in there. So
absolutely.
That really pulled the numbers up. And now, I think this month is showing like more the true numbers and the market we're in. It was just masked by an anomaly of a handful of high price sales. But yeah, totally.
Tip of the month. Tell me about this, Dave. So, we haven't seen a buyer's market at least in the last 5 years. Talk to me about both buyers and sellers. What are some things that change in a buyer's market compared to, let's say, a balanced and a seller's market? What are some things that, what are some strategies buyers can use? What are some things, how can we adjust their expectations to go along with this shifting market?
Yeah, first of all, for the buyers, it's the revenge of the buyers, right? Or the buyers strike back, because they've been put through the grinder now for years. Especially that 2022, where things got up to 800K, 30 offers on things, people holding at 499, selling for 800. It was like demoralizing for buyers. Now, if you're a buyer, prices are down, a lot more to choose from. So that's 2 wins right there. Now the rates are higher, but just do the math. Look at what your mortgage payment, like a house that you would have bought a year ago for 700, and now you can get it for 6 or 570, right? What's that payment look like? Plus your down payment could potentially be more. So for example, maybe you had 15% down before, but now that same amount of money could be 20% down. Now you avoid CMHC default insurance, so you're kind of winning there as well. So you're buying more of your home. Yes, rates are high, but really do the math and offset that against what the purchase price is. And I'm willing to bet most of these, especially after this drop, that your overall payment is going to be less. And then there's the inventory options, and you're not in competition as much. You can get you can get conditions in like you couldn't last year. You could get last year, the buyers were taking on all the risk. They had to go in clean, no conditions, so they can't even inspect the home. They can't even have a fulsome conversation with their bank. Some of them, they just want the house. They threw a clean offer, no conditions, and they assume a ton of risk. Buyers right now, everything I'm seeing has financing inspection on it, and you're finally getting an appetite for sale of buyer's property condition, which you would not see this time last year. Like I got one right now that's in play. So there's a lot more control and a lot less risk for buyers, a lot more options for buyers, and prices are down. The only con for buyers is obviously the rates are up. Now the sweet spot is if you own a home and you locked in at a nice fixed rate, and most financial institutions now look into this, but look and will let you port that over. So if say you've already got locked in at a 2.5 from a few years back, you can actually port that over to the more expensive asset. Now, if you need more money, they do a blended rate, but ultimately you're in a better place. Now when you're selling, you're going to sell it low, obviously, because the market went, but you're buying the more expensive asset at a lower price with the rates from yesterday. This is where I think it can be a real win for buyers in general, but buyers that are buying and selling, especially where they're buying a more lucrative asset. I think this is just phenomenal time right now. Not a few months down the road, it's right now. So I guess if you're on the selling side, my tips for sellers is you got to be educated, up to date on the market, and you got to price appropriately, because going stale in this kind of market is a killer. Like we see it all the time. You go a little bit of high, you sit for 30 days, buyers see blood in the water, they go lower, potentially lower than you would have gotten if you priced appropriately. Right? It just gives the opportunity when you're sitting. So if you're a seller, you got to do your homework and price appropriately. Not saying give a discounted home, but price your property appropriately for the market we're in. Not 3 months ago. You got to get the most information, work with your agent, and you got to price that appropriately. Because if you don't, that's what I'm saying. It's a killer going stale in this kind of market.
A lot of opportunity, and it's super easy as realtors. Always a fantastic time to buy or sell, but ultimately, discuss with your realtor, discuss with your partner, discuss with your financial advisor, with your mortgage broker, discuss with everybody as to whether or not it makes sense for you to buy, sell, or move. Just because the market's doing something doesn't mean, it's a fantastic time for you to buy, sell, or move. Always, look at your financial picture. Look at, what you're trying to do, how that will affect your monthly finances. Always look at that to decide whether or not it's a good time to buy or sell. It's not, indicative of what's happening in the market. Always, it comes down to that individual perspective and that individual's experience.
Yeah, you kind of touched on it there, but a little secondary tip is I feel like a lot of people are very loyal to their bank, and they just go into their one bank, get qualified, see some numbers, they don't like them, maybe they decide not to move. Work with a really good mortgage broker. Any decent mortgage broker has relationships with all of the major banks, has relationships with other mortgage companies, and if need be, don't recommend it, but like private money and things like that. They'll shop around and get you a better rate. we just get very loyal to our financial institutions because some people think of them as like a social service that's there to help. Not, in fact, it's a business trying to make money off of you. So I won't throw banks under, but I was with a bank 22 years. It wouldn't even come close to matching what everybody else was doing. And I was like, well, why am I being so loyal? It's going to cost me tens of thousands of dollars for me just to stay with them for convenience. So yeah, so I jumped ship. Don't be loyal. Shop around. If you don't want to do it yourself, get a good mortgage broker. Mortgage brokers typically don't get paid from you. Just talk to them about this up front. They typically get paid by the lender at the back end too. So, and they're way more educated than a lot of people that work at the banks. I feel like there's high turnaround at the banks. And yeah, so mortgage broker, tip number 2.
Yeah, and again, always discuss whether or not it's right for you. That's the big, do your research, talk to professionals and decide whether or not it's right for you, because it might not be. So just, definitely do your research and try and get the best advice possible from professionals in the fields. All right, deal of the month, 733 Downey.
Yeah, I heard this one is one of the best agents in town.
Oh yeah, do you know him?
Yeah, no, really well.
Yeah. So talk to us about this one, Dave. This is obviously your listing.
This is my listing.
So tell us about 733 Downey at 569.9. Let's go through the pictures.
I genuinely, I know it's my listing, but I genuinely believe this is some of the best value on the market. First, it's neighborhood it's in, just North End community, just above Park Hill, walking distance to Jackson's Park, which is very desirable. You're short, when I say short drive, you're a few minute drives from the hospital, you're a few minute drive from downtown Peterborough, and all the amenities. As I said, there's parks, there's trails. It's a lovely location. But then you have the home itself. For this neighborhood, there's a lot of wartime bungalows, but this is a really large lot for this neighborhood. It's 60 by 140. So it's there was like a right of way around the back that never got opened up, and it's still part of this property. So it's a really big lot. Yeah, the property line actually goes to that, almost to those trees on the right. Lots of parking, easily fit 4 if not more vehicles in there. For the investor types, this used to be a 5-bedroom. It's currently a 4, but there's you could easily convert it back to a 5-bedroom. Has a side entrance, central location for both Trent and Fleming. So that's for the investors types. But also for a family, right now it's got the 4 bedrooms. As I said, it's a good quiet neighborhood, and yeah, just got a great layout. It's got that detached garage. The gardens are immaculate. I just think this is great value, to be honest. This is something that I think easily would have been up in the 6s really not that long ago. And I think this is really good value, and it's very well cared for. You can kind of see it in the pictures, but you really got to get through it. The current owners have had it for 12 years, and they're very meticulous. And yeah, there's nothing really day one you got to do. Windows, roof, furnace, all aren't coming up anytime soon. So again, I think this is great value. And it's we got 2 open houses this weekend. So pop out and take a look, or contact myself or Alex if you want to have a private showing.
Yeah, and I know that maybe things can seem a little biased because Dave's listing the property, but I have been through the property twice, and it shows even better than it does in the photos. It looks incredible in the photos, but it shows even better. So definitely contact your realtor, come check out the open house, or reach out to Dave or myself for a private showing. This is a beauty. Like it's that location's fantastic, as Dave mentioned, and yeah, it shows even better in person. And they've just done an awesome job taking care of the property, and yeah, it's just awesome. So go check it out. We also think it's a really good deal at 569,900. So that's why we highlighted it today.
There we go. Another one in the can, buddy.
Yeah, I was looking on the title here, episode 13. So I guess we've been doing this for more than a year, 12 months in the year. If my math adds up.
I think because we did a year in review, so this might be the 12th one. I think.
Yeah.
Maybe November was the first one, and we got to do a year in review again.
Yeah, we do, but that's just crazy that we've been doing this together for a year. It's been a fantastic year, and yeah, time's just flying. It's just flying.
Yeah, no. A year ago, you were just this lonely, unmarried man. Now,
now look at me. Hopefully get a mustache here by the end of November. We'll see.
Yeah, we might have to make sure your mustache is cut off before the next one. If you haven't seen,
Yeah.
he's 3 days into his Movember.
Yeah.
We'll see how
Getting
creepy
a little
it gets
stubble.
by the end of the month.
Yeah.
Lucky for you guys, he most likely will have it cut off by the early December.
Unless Bryn loves it, which is unlikely. But unless the wife falls in love with it and goes, "Don't shave it," we might be making an appearance for the November market update. We'll see.
Maybe we should have done that, and then you have to, or I shave mine into a mustache.
Yeah, that'd be fun.
All right, man. Well, thanks for putting this all together. As you know, I appreciate
thank you.
Love
Appreciate your insight.
And let's see what happens with this crazy market in the next few months.
Yeah. Let's see what happens. And without further ado, folks, that's all, folks. Take care. Until next month.